FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
All right, we are back on the Financial Survival Network. I'm Kerry Lutz, and someone we haven't had on in a while, Palm Beach Letters publisher, Tom Dyson. And Tom, welcome back to the show.
Thanks, Kerry.
Hey, so since we last spoke, a lot's been happening. The market, the stock market, well, at least the Dow anyway, and the S&P 500 keep making new highs, but they look like they're running out of steam. And perhaps conversely, the precious metal market looks like it may have come back to life. So I'm sure you got some thoughts on this. I know you watch these markets and others constantly. So first, stock market, what's your feeling there?
So the Dow just hit 17,000 last week, closed above 17,000 for the first time ever. The last let's call it high water mark in the Dow occurred in 2007 at a little over 14,000. So then, of course, we had a huge decline in 2008, and now we're at 17,000. So that's more than 20% above the previous highest ever level. So that's good, right? I mean, that's things are happy, things are good, everything's working.
Yeah, you don't sound so convinced.
No. Well, so first of all, where should we go? So where is the market going to go? I don't know. Like, could it go down? I mean, generally things go up, come down again in the market. That's what I've seen. It's what I've noticed. And right now, volatility is very low. There feels to me like a lot of complacency, and the market's sort of almost boring. It's just sort of got this very grinding sort of thing. There aren't really many big triple-digit moves in the Dow, and I don't know. I sort of sense there's a sort of suspended animation going on with the market. Again, I don't know where it's going to go. I don't like to predict, and our investment strategy is not based on predictions of where the market's going to go. We just buy good quality stuff that's going to compound our money at 10% a year, and then we stick with it, thick and thin through the long term. But I don't know. I could see a pullback. I think a pullback's probably due, and if you made me predict, I would say the market's kind of a little bit tired. But again, these things can go a lot longer, and who knows, maybe it could go. I saw someone, was it the editor of the Wall Street Journal, predicting the Dow going to be 20,000 pretty soon. But the real thing is, does this have any connection to the real economy, to the real world? And I'm kind of confused about that too. On the one hand, I speak to a lot of bankers, and their bonuses are not big. They're not getting paid what they used to get paid back in 2007. The activity is not what it was back in 2007. Is Wall Street really as healthy as the Dow or the stock market makes it look like? I don't think so. I think there's a lot more regulations. I think basically what's happening is there's a lot of cash, a lot of money, a lot of easy borrowing going on, and a lot of that money is not going into the real world, but it's going into the stock market. And so basically there's an inflation in stock prices going on that doesn't really have any basis in real economic output. That's okay, but it's not the foundation for a solid bull market, I don't think. But, more and more I'm sort of starting to question myself, what do I know anyway? I just trying to respond to things. Yeah, exactly. And honestly, I really don't know what's going on, and I've been confused and slightly miffed for a long time, and sort of actually stopped watching this stuff so closely. I start to think it's a little meaningless, and instead just focus on buying really good quality and identifying really good quality companies and bonds and investments that really will do well regardless of what's going on in the circus on Wall Street. So yeah, does that answer your question? I know I probably don't give it that much specific value there, but...
Well, give us an example of a stock. Obviously, you can't give individual advice, but if you were to one of these stocks that you think is going to do well, regardless what happens at the circus.
Well, we've got a bunch of stocks. We've got a really good record. But one company that we like now is Goodyear, the tire company. I don't have any statistics or facts in front of me, but the basic gist is Goodyear is one of the cheapest stocks in the S&P 500. Goldman Sachs just published a report, and Goodyear was right in there as one of the cheapest 20 stocks that Goldman had identified. And it's gone up since we first identified it. I think it's up 20 or 30% since we first found it. But at the time, it had a single-digit PE ratio, which is astounding. But the cool thing about Goodyear is it makes most of its money by selling replacement tires. Not brand new tires, replacement tires. And if you think about it, in 2008, Detroit and GM and all these car companies had a problem. GM went out of business. People stopped buying cars. And then the president introduced cash for clunkers. Remember that? And then for the last few years, there's been a big upswing in the number of cars purchased. So typically, you replace the tires on your car 5 or 6 years after you buy the car, something like that.
Depending how much you drive, yeah.
Yeah, so our theory is that Goodyear is going to get really busy replacing all those tires from all those cars that were bought since 2009 and in the big kind of boom in automobile purchasing that's gone on in the last few years. So there's a tailwind of replacement tire purchases going on, and Goodyear is going to really benefit from that. And given the fact that it's very cheap, it's trading at, I don't know if it's trading a single digit PE right now as I speak, but it was a few weeks ago, and so it's not far away if it's not. That's a company we like. It's got a great brand name, and it's not going out of business anytime soon. So yeah, that helpful.
Yeah, and if new car sales go down and people start keeping their cars longer, they're also going to be a beneficiary of that trend as well, right?
Got to replace the tires, yeah.
Yeah,
so,
you don't have a choice, right?
Yeah. So, and I don't know if this matters or not, but I like to think that the road system out there is terrible. Because they have invested in the highways and all the potholes and stuff. And I've read that tires are getting worn out quicker than they did before because of the bad state of the roads. And so maybe that'll help too.
I believe that. Certainly up north in New York, where I came from, I'll tell you, you just couldn't. Sometimes I'd blow 2-3 tires a year just on potholes, bend wheels, and stuff like that. So that makes sense. Sounds like the kind of thing you want to be in. It's a counter-cyclical play as well as a play on the cycle of people who are going to have to change their tires after they've had those cars for a while. So.
Yeah. But most importantly, it's just a good company that's managed well and it's cheap. And that's the kind of company you want to hold for a long time.
Yeah, I'm looking at a chart on them at Yahoo. Looks like their PE's gone up to about 14, and they actually pay a dividend as well. Not much of one, but a little bit.
They just started, yeah.
Yeah, so that one looks good. So, but the party on Wall Street, I guess it could keep going on for quite a while longer as long as the liquidity's there. They can borrow money and buy back their shares and look like heroes, right?
Yeah, it's not I don't think it's a party on Wall Street. I think it's a party in the stock market. I don't think these Wall Street masters of the universe, I don't think they're partying as hard as they were back in 2007. It's just the market is doing really well. And, I know, for instance, my dad's trying to sell his house in Westchester, which is, where all the bankers and Wall Street guys live. And he's barely had any interest, and he's still cutting the price now. And the real estate there, I would imagine, is pretty closely correlated to how well the Wall Street bonuses and stuff are. And so I don't know, it's anecdotal, but I just kind of get the feeling that things aren't as rosy as the stock market might lead you to believe.
Yeah, I used to live there myself, so I know what you're talking about. Those were my neighbors.
Your phone number has a 914 area code, right?
Yep, that's Westchester County. So, yep, I know exactly what you're talking about. So you can't always judge a book by its cover. And
not in this case. I don't think the stock market's it's an animal unto its own.
Yeah, and in a lot of ways, it's more headline value than anything else, right?
What do you mean headline value?
I mean, propaganda value for the for the government to say, look, the stock market's going up. We must be doing something right. Mm-hmm. Right?
Yeah, it makes people feel good, and then of course the poor investors invest all their 401ks into it and stuff. And so, yeah.
We'll see how that ends. So when we come back, let's talk about precious metals on the Financial Survival Network. We're speaking with Tom Dyson.
FSN Radio. It's all about what's next.
Urgent alert. Ex-Secret Service agent claims it's worse than people know. One of Obama's former Secret Service agents recently smelled a rat. What he discovered inside our government was so devastating, he only saw one option. He quit. What's worse, he fears what he found could affect your job, your neighborhood, and most importantly, your family, very soon. It's worse than people know, he said in a recent interview, and I'm not trying to scare you either. We too share his concerns. This is why we've devoted the better part of 3 years collecting solutions for nearly all problems created by intrusive governments. And we've succeeded. Go to hiddensecrets1.info to check out all the details. Our panel of insiders have devised a legal but sneaky set of solutions to help you reclaim your privacy from the NSA, opt out of Obamacare, and make a bundle from little-known investments and small business opportunities. Simply visit hiddensecrets1.info. That's Hidden Secrets, the number 1.info.
The Financial Survival Network. It's all about what's next.
We're back on the Financial Survival Network. We've got Tom Dyson with us at the Palm Beach Letter. So, Tom, I know you keep a keen eye out on the precious metals markets. Looks like, at least since the beginning of the year, but certainly since last month, something's going on there, huh?
Yeah, there's a little renaissance in gold and silver, just a little bit. And I'm sort of quietly optimistic about this. First of all, the gold mining sector is so cheap. It's like the only place in the entire market, the sort of the sector that has any real value. I guess coal mining does, and there's maybe a couple of other places, but gold mining is cheap. You can buy that and hold your nose and not even have to worry about what I'm about to say, because it's just cheap and it's a good value. So I don't think people are buying into gold. I don't think there's any sort of optimism or positive sentiment there. I think actually I read an article in Bloomberg a couple of weeks back that polled all these analysts and everyone was bearish on gold. And yeah, so I'm quietly optimistic about gold, actually.
Well, analysts, Wall Street analysts especially, have never understood precious metals and the markets, have they?
Never. No, they don't. They in fact, not only that, but they actually disparage them.
Yeah. Other than ETFs and mining stocks, they really are really, like you say, disparage them. They hold their noses. They just really have no use for it because it's not a product that they can package and it's not commissionable. Once you buy an ounce of gold, that's kind of it. End of story.
Yeah, it's for like fringe lunatics.
Yeah.
Like us.
Yeah, right. But the reasons why you buy gold are the exact opposite reasons why you invest in the stock market, right?
Yeah, pretty much. Wealth preservation and safety, and whereas the stock market is, well, I don't know what reasons people buy the stock market.
Yeah, it makes you wonder, huh?
Yeah, it does. Yeah.
Well, we've seen it over and over again, but, there's certainly no exuberance in this market. It's dull right now. I mean, you had that one day gold went up $40-something, but otherwise the market's been pretty dull. So you don't see anybody really selling short into it. The whole composition of the market's really changed since the end of 2013. It's just trading differently.
Yeah, I think you'd know better than me. You probably spend more time plugged into the gold market than I do, actually.
I try not to obsess over these things. It doesn't do any good. And I find I don't understand what's really happening anyway, other than the price tells all, Yeah,
it does.
In the final analysis. But are there any interesting ways you've got there that you've seen of playing a potential rally in it?
Yeah, I like, what is that? The Central Fund of Canada, CEF. Sure. I love that thing. That thing is rock solid. It's really well managed. It's got low fees. But it's cheap. That thing always trades at a premium to its net asset value. What that means is they have a bunch of gold, and you always have to pay a little bit more than what that bunch of gold is actually worth to buy that fund because it's so trusted. But right now, I don't know, I looked a couple of weeks ago, it was trading at a 5% discount. You're effectively buying gold at a 5% discount to buy the best managed fund there is. So CEF, Central Fund of Canada, I love that idea.
Yeah, I think it's at 5.6 right now or 5.34.
Discount?
Yeah.
That is never at a discount. That thing, I don't know what. Have you got a chart in front of you? It goes up to like 20% premiums often.
Yeah. It usually trades at a few percent premium, 3-5%. When it trades at a discount, it's something that you really need to pay attention to.
You need to buy it. Yeah, I love that thing. Is great. So, for listeners, just Google Central Fund of Canada. The symbol is CEF, and you can go and read the prospectus and poke around on the website before you buy anything, and you'll be amazed at what a quality investment this is.
Yeah, their fees are really cheap. The management fees, they don't pay a fortune.
Yeah,
they don't pay a fortune to store this stuff. They've actually got it. It's audited yearly or bi-yearly. You know, they actually send people into the vaults to look at it, and it's actually on the level as best as I've been able to ascertain. So it's definitely something that you want to take a look at. And anything else? Any other mining companies that you find interesting at this point?
No, I don't have. We're looking, though. We are going to come out with a report pretty soon with some of our favorite mining companies, but I haven't finished that research, so I'm a little way off from that, so nothing right now. But yeah, we're getting into the mining stocks. They're so cheap, and the cheapest ones are the junior ones. So
yeah. So the thing to look out for juniors is you want to make sure that they're not counting paper clips, that they actually got some cash in the bank, that they have a real resource, that it's not make-believe, right? And that your management has actually got a track record of success in the past.
Yeah, I would just skip that and just go right for something like GDXJ.
That's an option as well, right? The index of juniors.
Yeah, then you're sort of protected from all that. And really at this stage, I don't think it matters what you buy. It's all going to go up if it does all go up.
Yeah. And when you look at what the U.S. government and all the other governments of the world, it doesn't matter what government, right, Tom? They're all behaving irresponsibly with their monetary and fiscal policy. Can you find a government that isn't?
Let's think about that for a moment. No, I don't think so.
Yeah, I mean, you look at China. I mean, they've been outprinting the rest of the world 2-1. And you know that it can't have a happy ending, right?
No, I mean, this is a long conversation, but no,
briefly.
Yeah, it's government. The incentive, the way these things are set up, there's never an incentive to take care of the currency and not inflate and not keep interest rates lower than they should be. And so, but now it's particularly bad because they've all banded together and they're all cooperating with each other. And of course, the dollar is central to all of this. And I think the pressure for not following everyone else is huge. So they all band together and they all engage in these short-term, short-sighted inflationary policies, and ultimately it will come back to hurt. Yeah.
Eventually you got to pay the price, whether you like it or not. And that price is pain and sacrifice. And I don't know about you, Tom, but I'm a believer in cycles. I think these things happen no matter how well a country or a world is run or how badly. I think you could do things to minimize the cycles. You could do things to really make them more painful. I think the world as a whole has done everything they could to make this one much more painful than it ever had to be. And we're in the process of doing that now, and it just has to run its course and, let the chips fall where they may. Hey, Tom, just tell us how we find out about the Palm Beach letter.
You can just go to the website, palmbeachletter.com, but I don't think you can sign up for it there. So you could try PalmBeachLeather1.com.
Okay.
That should work. PalmBeachLeather1.com.
All right. Excellent. And we will talk with you again soon. And a link to that site can be found in the show notes to this interview on financialsurvivalnetwork.com. Don't forget, sign up for our free newsletter. Tom, it's been a pleasure. We'll talk with you again soon.
Thanks, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.